Good morning and welcome to TipRanks News Bites. I'm Ari Gutman. Today is Wednesday, July 13th, and our top news bites for you today. The latest reading of the Consumer Price Index will be released this morning. Now, White House officials are already stepping in and preparing the country for higher inflationary levels. Google is joining the consolidation bandwagon with a company-wide email threatening layoffs. And finally, more American factories are slowly but surely making their way back home as COVID-19 spikes throughout mainland China. Now, be sure to stick with me throughout the entire duration of today's segment. You are not going to want to miss out on the breaking TipRanks insider news to discover who just hiked stakes by millions of shares in an online personal styling service. The long-anticipated day for many has finally arrived. Today, June's Consumer Price Index, or CPI report, will be released. The report measures the monthly change in prices paid by U.S. consumers as it takes a weighted average of prices for a basket of goods and services, all representative of U.S. consumer spending. Now, given the CPI report is the most popular measure of inflation, all eyes will be on this reading today and has everyone from investors to economists on their toes. Even the White House has begun sweating this one as White House officials began bracing the entire country for elevated inflationary levels, with economists now expecting June's reading to climb to a higher high of 8.8%. The market expects the Federal Reserve to continue to keep a more hawkish tone moving forward, which means a 75 basis point rate hike is more likely. Either which way, it is safe to say that market turbulence is far from over. As for executive sentiment on where exactly the economy is heading, all the evidence we need is within the growing number of companies, specifically tech companies, that are slashing jobs left and right. From Netflix to Robinhood, Microsoft to Tesla and Coinbase, to the most recent tech titan, Google, joining the consolidation bandwagon. Now, in a company-wide email, Google CEO told employees to be more entrepreneurial and work with more hunger. He also shared uncertain global economic outlooks and committed to slowing down Google's hiring pace moving into the second half of 2022. Now, based on our reports, the overall messaging when reading between the lines was essentially for employers to work harder or face the boot. Now, in the face of a looming recession, we can only expect more companies to follow suit and only making for extended, trying times ahead. Finally, after years of supply chains being far too disrupted and American CEOs sharing they would bring production back home, there has been some acceleration in both the planning and follow-through from U.S. companies as China jumps in and out of lockdowns to combat COVID-19 spikes. As of recent reports, construction on new manufacturing facilities in the U.S. soared to 116% according to Dodge Construction Network. Now, additionally, chip factories have been amassing throughout Phoenix while aluminum and steel plants are being erected throughout the South. These are all positive signs for future GDP growth, but with economic conditions as they are with higher levels of inflation, only time will tell if this progress will continue. And to wrap us up in the TipRanks Breaking Insider News edition, Stitch Fix, an online styling service, just got a boost during late night trading as Benchmark Capital's Bill Gurley reported buying millions of shares worth of Stitch Fix. Following the report, the stock rallied by 8%. Now, as we speak, Stitch Fix is currently trading between $5 to $6 a share. Hedge funds have been increasing their positions with the company, and blogger sentiment has been rather bullish across the board. So if this company may be fitting for your portfolio, be sure to check it out on TipRanks to perform your own due diligence prior to making any major investment decisions. Tip Rankers, that's our news for today. We would absolutely love to collect your thoughts on the current market conditions, where you think we're heading economically, and of course, your thoughts on Stitch Fix. Now, be sure to always stay up to date, stay informed and connected by joining us right here on TipRanks TV, all the shows you just cannot afford to miss. Now, until next time, thank you for tuning in.